Ray Dalio, founder of Bridgewater Associates, the world's largest hedge fund with assets of around $140 billion, has given his latest thoughts on inflation hedges, Bitcoin and gold. Today we consider his analysis, so let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy, so please do consider subscribing. Now, Dalio provides an interesting case study as it is a hedge fund which has prospered not through high frequency trading or speculating on financial collapse or takeover of undervalued companies, but instead has been a master in asset allocation. It seems to most observers that Bridgewater's approach is to build all-weather portfolios which are optimized to perform strongly in a variety of different scenarios. At the WEF's Davos Shindig in January 2020, Dalio famously stated that cash is trash and that gold offered him diversification for uncertainty and plunging bond yields. Before stating what are central banks going to hold as reserves, what has been tried and true, they are going to hold gold. That is a reserve currency, and it has been a reserve currency for 1,000 years. At a point in the future, we still are going to think about what's a storeholder of wealth, because when you get negative yielding bonds, we are approaching a limit that will be a paradigm shift. At the same time, he argued that investors should not go anywhere near Bitcoin due to its extreme volatility. Now, it's important to understand that the typical wealth management approach was a split between 60% allocation to equities and 40% allocation to bonds. The equities would obviously perform well in bull market risk-on scenarios, and the bonds would offer insurance during bear market risk-off scenarios. Dalio's firm would often use leverage on bonds to enhance the performance and offer greater protection in bear markets, while they would also utilize international equities and bonds to make a play on both market growth and currency speculation. This approach was driven by world-beating data and financial modeling, which seemed to enable the firm to never take a backward step. Thus, while growth seemed slow compared against some other hedge funds, the compounded returns enabled Dalio to be seen as the most successful hedge fund manager of all time. Yet, despite gold putting in a new all-time high in 2020, Bridgewater went on to lose $12.1 billion. Since then, the everything bubble has gone into overdrive. Equities remain dangerously overvalued, so too, of course, are bonds. And so Dalio has reconsidered the construction of his all-weather portfolios, and his take on Bitcoin and gold now, well, he now states that I would take the gold, I would like to sprinkle a little bit of Bitcoin into that mix too. Unquestionably, this is his inflation hedge strategy, a sprinkle of Bitcoin. This is quite an interesting turnaround from 20 months or so ago. In the UK, Bytetree Asset Management use a similar approach utilising gold and Bitcoin. Bytetree's Charlie Morris highlights this in his money map here. So in preparing for inflation, gold and Bitcoin must be held, with gold likely to perform better when yields are lower and thus perceived risks are greater, that risk-off scenario. However, when yields start to rise and the market switches to risk-on, Bitcoin and equities are likely to excel. Moreover, in an inflationary environment, Bitcoin will outperform equities. Now, Dalio is generally conservative in his approach and is likely to be someone who is concerned about the volatility still of Bitcoin. To that end, Bytetree devised a bold index which combines gold and Bitcoin, as Dalio suggested. Charlie Morris explains that combining Bitcoin and gold is a good solution. Both assets are long-term stores of value, yet they both have strengths and weaknesses. One is volatile, the other is calm. One is modern, the other is ancient. One requires energy, the other does not. One has utility, while the other has little outside of jewellery. Above all, one is an established monetary asset accepted all over the world, whereas the other hopes to one day catch up. Now, in trying to manage volatility within a portfolio, you're effectively trying to manage risk, and ByteTree found that gold's volatility over the course of the last year was 12.3%. In contrast, Bitcoin's volatility was 56.1%. Consequently, if you divide 100% of your inflation hedge by Bitcoin's 56.1%, and then again by gold's 12.3%, you can arrive at an inflation hedge allocation of around 82% to gold and 18% to Bitcoin. This ByteTree chart demonstrates Bitcoin's index performance in black and gold's in orange. But the combined inflation hedge, as outlined, is in blue, which clearly averts much of the volatility or risk of Bitcoin, but obviously doesn't offer that outperformance that Bitcoin did over this period. And so while gold's performance may have lagged somewhat during this time period, I do not doubt that when the markets switch to risk off once more, we will see gold outperform once again. But a further strength of this approach is that at the end of each month, it would suggest a need to actually rebalance the portfolio to maintain that 82 to 18% allocation within the inflation hedge, thus selling what is highly priced to what is lower priced. And so while this strategy looks poor against Bitcoin, it offers a far less volatility. Moreover, when compared to allocating simply to the S&P 500 index over the same time period, the results of ByteTree's Bold Index outperform considerably, to the extent that ByteTree expect to actually launch a Bold ETF in January 2022. Now, of course, this information is for information purposes only and is simply my opinion and is not financial advice or a sponsored video. It's simply an interesting notion to my mind, and personally I think everyone could use a small allocation to the primary crypto assets as a risk-reward play. However, I know plenty of you entirely disagree, and that's absolutely fine. So thanks so much for watching, and I hope that's been a useful video. Do make sure you follow me on these alternative platforms, Rumble, Odyssey and BitChute, and I look forward to seeing you next time. Bye bye.